All right, folks. Welcome to Investing for Beginners podcast. Today we got a fun show. Our friend Brett Schafer from Chitchat Stocks is back again to talk to us about all kinds of stock stuff. And today we're going to talk about how to source investment ideas. So this, I think, is a very important topic that probably doesn't get discussed quite enough. And we came up, well, actually, Brett came up with a lot of great ideas, and I'm just going to add my 2 cents worth as we go along. So full credit to Brett for these ideas. So first, let's talk about like maybe how do you source ideas, and which of these maybe areas are things, do you use all of them, part of them, one of them? Like as we work through these, what is your method?
Well, I should say first, I think in the age of the flood of information that people see online, it is much more important to curate, to find good sources, find trustworthy sources, especially with investing, because you can just go all over the map. And if you're not careful, you might make some big mistakes, especially as a beginning investor. I'm really not, I'd call myself agnostic to finding stock ideas. The most important thing for me is whether using Twitter, other online communities, or subscribing to newsletters, using Value Investors Club, Yellow Brick Investing, or screening with a tool like FinChat. I want to find inspiration for research. So if I'm reading a write-up or I see some quick tweet from someone that says, all right, this new ticker, a couple of bullet points, and they're bullish, or say they bought it and they're interested in it. I trust this person. I'm not going to buy because of that, but that's going to inspire me to put it on my research list, which I actually have on the whiteboard behind me here. And I'm going to research further on that. It's a whole different method, looking at the investor relations pages, looking at the SEC filings, looking at the earnings calls and stuff like that. But I want to use these tools as inspiration for stuff I want to research myself, just so I'm not outsourcing my conviction and actually understand what I'm investing in.
Yeah, that's a great framework. So what you're saying is you don't get an idea from uncle at Thanksgiving dinner and then you're buying it on the following Monday morning kind of thing.
Yeah, exactly. Not with the friends out on the golf course and they say, oh, this might be interesting because of the tariff war. And you go, well, maybe, but hey, they could be onto something. I'll go research that myself. You definitely don't. And I just did some research on Li Lu, the famous Chinese investor from protege of Warren Buffett and Charlie Munger. And he had a great quote that said, if you don't actually understand an investment, it will eventually expose you, because when it goes down, almost every company out there will have a 50% drawdown, maybe even more severe. And when it has that drawdown and you don't actually understand it, you're going to get scared. You're probably going to sell. You're probably going to make a mistake. So understanding what you own is very important.
Yeah. Uber important. All right. So let's dive into like the first way that you would consider sourcing ideas. We talked a little bit about Twitter and online communities. So what about them helps you find or could help people find ideas?
Twitter is great for a few things. Now, Twitter, X, whatever you want to call it. I'd say it's a little bit worse now since they de-emphasize links. So when someone posts a link to a Substack or a newsletter or a website or any sort of blog that has more detailed analysis, it's going to be downplayed, so it's harder to find. But I like just building up the network of, and I think there's probably millions of people on there that are interested in investing around the globe. It's very exploratory, where you might, and I know a lot of people use it for keeping real-time news and stuff like that. That's not, I do that, and maybe I waste my time doing that. But I think from an investing perspective, it can be more exploratory in the fact that you have all these people within your network. You just look at what they're talking about. There are a lot of people that will post stuff publicly for free. There are a lot of people working in the industry posting anonymously, just because their work doesn't allow them to do it under their actual name. And you can also use, and this is a little tip for people, the search function for tickers is actually quite helpful. So if you just put a $sign before the ticker and you have, say, $sign, the ticker for Alphabet is GOOG, you can search that. And now Twitter's search function may need some improvement sometimes, but if you work through it, I think you can find some interesting stuff, and it can actually help when you have already started your research process. So let's say I think, well, Google's probably not a good example because everyone knows what that is already. Let's say some different company I'm not aware of. I look at the company, I think it's interesting after reading some of their basic information. I can search the ticker on Twitter. I can see, oh, is there anyone that's written anything about this? Anyone that's bullish? And you can, a lot of people have DMs. You can DM them, say, hey, you've been following this for a while. What are your thoughts? What am I getting wrong here? It can be very interactive. You can just explore. You cannot message anyone. But I think there's just such a flood of information on there that if you use it correctly and work a little bit, you can find some gems, some diamonds in the rough. But I would hesitate. I think an important thing is trying to weed out the, let's say, sensational accounts is maybe the right word for it, because there's a lot of drama, noise, chaos, a lot of emotion from people that are trying to get you to read their tweets, especially in the era of monetizing your own tweets. And getting rid of that, filtering that out, muting stuff like that, that can be helpful and make it a lot more worthwhile to spend your time on there.
Yeah, those are great tips. Things I have done are muting certain words. Like, I'm not a crypto investor, and so I've muted, crypto, Bitcoin, all those things, so I don't have to see a lot of that stuff because I'm just not interested. The other thing that I did, I learned this trick from Brian Feraldi, was when you find somebody that you think is interesting, look at the people that they're following for other ideas of people that you could potentially follow. So following you, then I would look and see who you follow, and then I could check out their profiles. And if there are things about them that I think is interesting, then I can follow them. And it's a good way to kind of broaden your horizons without having to, as you said, kind of sort through, kind of wade through the ocean of some of the more sensational types of posting that there are a fair amount of people that will do. You just don't want that in your feed. I try really hard to weed out the things I don't want to see in my feed, and it makes it a lot more enjoyable for me as on a regular basis. But I also notice that I'm more likely to find something that's going to be interesting, because even though, let's say that you and I don't necessarily tweet something or X something that you like, but I may follow somebody that you might find interesting, and they may tweet something, and because I retweet it or like it, it could show up in their feed. Oh, I would have never even heard of that person if so and so hadn't pointed me in that direction. And so I think that's a great way to follow it. I guess, what are your thoughts on the whole idea of the the Borg collective following certain companies? Because you notice sometimes that there can be a wave of everybody's talking about this company or that company or that company. Like, how do you kind of interpret that, and does that make any impact on what you might add to your whiteboard or not?
Yeah, that is a good point. I forgot about that one, where it almost becomes a theme or a narrative of the month, and people are talking about a company. There's, it's usually one that can be more of a, how do you say it? There's bulls and bears. It's a controversial company. There's people that have varying opinions on it, and it can get quite discussed. I like to use those as, again, it comes back to not outsourcing your investment research entirely, where you want to look at, people that are thoughtful, and they may have good write-ups on the company, can maybe help you a lot with your research. But for a company like that, I'm not afraid to put it on the research list. And if I think the company is promising, I'll put it on the watch list. But usually with those type of stocks, they've gone up a lot, and I find the valuations to be demanding. So a lot of the times that gets tossed on the watch list, and I'm following them for, a few quarters, and hey, maybe sometime it'll become a good buying opportunity. But besides that, sometimes you don't want to buy. And
No.
usually if a lot of people are talking and exciting about a company, it means there's a lot of investor enthusiasm in general, which can mean that the stock trades at a premium valuation. The two things I will add is, in the era of these Twitter and other social medias de-emphasizing links to other platforms such as Substack, Beehive, websites, or any place where people do long form investing write-ups, which can actually be much more helpful in your research process, I would use Twitter. And there's a lot of people on there that have their own Substacks, their own newsletters, or whatever, myself included, like that they will put the link in, say, their bio, or you can find it by searching on Google or on the Substack app or Beehive or what have you. Find those newsletters and subscribe to those, because then you get a little bit, at least if it's someone that you trust, you'll then get that within your inbox and you won't have to deal with the clutter on Twitter. And the second thing I'll add is explore using the chronological timeline, which they still allow you to do, thankfully.
Yep.
I like using that because you can just scroll through and you're not going to read most of the stuff, but until you find a ticker or something from about a sector or what have you, that can be your inspiration to research something further. So you see a ticker someone hasn't talked about before or that you haven't seen, and someone you trust, someone you think is sharp, says, I like this for blah, 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 great report, I don't know, I'm buying more shares. That could be your inspiration to research it. But within the For You timeline, the one that's just an algorithmic feed, you might see stuff that you from people you're not even following. That stuff might not even show up. So I'd rather curate my follower list, add those muting stuff that you talked about, and then use the chronological timeline. It's not going to be as exciting, and there aren't going to be as sensational things that they're going to
triggering things.
yeah, stuff that Elon Musk wants you to see. But it's more helpful for your investing research process to put in the chronological timeline if you put in the work to follow, some smart people.
Yeah, for sure. I mean, I do that exact thing, and I use the chronological timeline to help me find not only interesting investment ideas, but also education or ways to think about things that I normally may not think. And that can be very helpful to broaden your horizons, because sometimes when you spend a lot of time researching different companies or whatnot, you can come up with a certain point of view that you think is the correct one. And sometimes when you come across even just a little tidbit, somebody might say something that you didn't consider, that can be very eye-opening and really can, in some cases, it can save you a lot of money. So it can be very, very helpful. I love to do that. So we're talking about newsletters. So I guess, how do you use newsletters, and do you focus mostly on like Substack or Beehive, or are you Motley Fool, Seeking Alpha? Do those kind of fall into that category too?
I don't necessarily like the news ones, although I guess I subscribe to the Wall Street Journal, but I don't like those type of newsletters. I don't like the Seeking Alpha ones, mainly because Seeking Alpha kind of spams your inbox with a lot of stuff. And even if you're not actually a subscriber, maybe if I was a subscriber to Seeking Alpha, but that's not my expertise. I know a lot of people enjoy that platform. I'm typically searching, Substack's the most popular, so a lot of them will be on there, but I'm looking for just to subscribe to as many newsletters as possible that do stuff like stock write-ups, stock pitches, sector analysis, anything that's going to help me learn more about investing or have, idea inspiration where, okay, this newsletter that I follow puts in a little title. Usually they're pretty simple. They have the ticker or the company name, and then they're like, okay, we either like this company, we're short this company, we're going to do some analysis on them. And my first tip for finding this is go for as many of the free passion projects as possible. Now, they might not post on a regular basis, but they can be helpful. And then I would also say, don't be afraid to subscribe and pay to any if it is reasonably within your budget. Now, if you only have $1,000 to work with, you're not going to subscribe $1,000 and give up all your savings. But as a percentage of your income or savings or what have you, you can really help your investing research. And I like to think about it as, well, if you're in an investment fund, you have a whole team of analysts working for you. But these newsletters, especially these paid ones with really sharp people, you can outsource this analyst work
Mm-hmm.
as an individual and get that high quality research to your own inbox.
Mm-hmm. Yeah, exactly. What do you do with that? Is that, so let's say you're investigating a company, I don't know, let's pick Moody's, and you're investigating Moody's and you come across an article that somebody you respect writes about it. Do you take notes from that? Do you save the whole article? Like, how do you assimilate that into your process, if you will?
Well, I'm not a good note taker, but I do like to read that. Yeah, I'll see if there's something that I've been researching and I haven't looked at, say, some newsletter I follow. I'll look and see if people have written about it. But I would not necessarily say I'm doing that every time, because after finding the company, it's more about like getting the idea inspiration, where we're not all going to be like Warren Buffett, which back in the day, fun fact, he looked at every single publicly listed company and he did this for, I think, his entire day. And we're not going to do that. None of us are going to do that. Maybe one person listening to this will do that, and you're going to be one of the best investors ever, but that's not going to be us. I'm looking for idea inspiration. And then when I start researching it, I care more about primary sources. So I'm trying to build my own opinions, and I'm not necessarily looking to outsource it to these other people. But what I will do is, after forming my own opinions, if I see someone that I trust, I'm going to look at what they say. And if they found anything I didn't find, it can almost confirm that if I didn't miss anything, they probably didn't miss anything either. And if they have varying opinions on it, I might go ask them questions or stuff like that if I have the ability to do that, if I know them. But it's not, I don't think just going, it's going to be much better for yourself if you form your own opinions on a company and go with that. You can't be afraid to build your own conviction.
Yes, I 100% agree. I always try to read them at least after I've read the 10K, some quarterlies, maybe an investor presentation or two. So I've had enough time to start to form my own opinion. And then I will look at those and, to your point, either confirm what I'm thinking or point out things that maybe I didn't consider.
Yep, exactly. It is, you mentioned the 10K, you mentioned the SEC filings. Those are important, at least to me, and I think, Dave, you would agree with that,
Yeah.
is because these are legally bound documents where companies are not allowed to exaggerate. They're not allowed to put in bold claims like at their investor day. If they say something on there, lawyers have read it and made sure, hey, are you being truthful here? Are you being honest? Are you disclosing everything that you need to disclose? So those things are best as your base layer. And then when people actually form their opinions, well, every investor out there will have an opinion on a stock.
Yes.
That's going to change. Like those are going to change from your own, at least, from time to time. And if you start there, you can just get chaotic, cluttered. You're going to have muddying opinions, and you're not going to be able to form your own. You're just going to look at everyone else.
Yeah. Yeah, exactly. So Joel Greenblatt, one of my favorite investors, years ago started this club that is another source another source to find ideas. It's called the Value Investors Club. What are your thoughts on that?
I like Value Investors Club. It doesn't get much updates. It's kind of an old website, but there's still people that post ideas on there. I'd also say you can check out Yellow Brick Investing, which is kind of trying to build a modern Value Investors Club by combining, like Substack write-ups, website write-ups, even people that post long form stuff on Twitter or podcasts like this one. I like those because you can search through timely-ish stuff where you turn into a chronological feed. You look at the companies that are being written. I'd say the one tip, because they're write-ups and they take maybe 10 minutes to read, and you can't read all of them at once. You have to be quick to eliminate stuff that's not going to be either within your circle of competence, or you can get out of the way right away. So if it's something that's not in the geography you can invest in, or it's something that is way too small for you, or you don't like bad balance sheets, or what have you, any sector, you can sift through those immediately. But when you find the ones that I tend to look at it, kind of go through because it goes in, what is it, reverse chronological order? Or
yeah, I think so.
The latest one goes first.
Yeah.
And I look at them just kind of sift through quickly, and maybe 1 out of 5 I'm actually interested in reading. And
Mm.
yeah, maybe I missed some good ideas from those other ones, but I want to know just the stuff that's within my circle of competence, stuff that seems interesting, and why at this moment they're pitching that. And then usually that will be, again, inspiration to go back to the primary sources and look at the SEC filings, earnings calls, stuff like that.
Yeah, exactly. I have noticed when I've searched through there using specific tickers for different ideas, sometimes you may come across, okay, I'm looking at, I want to learn more about Jack Henry, and they may only have the latest article was written in 2014 or something. And it's
Right.
like, that's not going to help me much. I mean, it may a little bit, but not really. So that's one of the things I've noticed that could be a potential downside to the Value Investors Club.
Yeah, I agree. There's also, especially on Value Investors Club, but in general, there can be people with different investing styles where someone might have a 6-month time horizon. They might be much more of an active trader. They might be much more of a deep value person. They don't care about business quality as much. And you have to look at that in the context of what type of investor you are and what type of companies you like to own. It might change a lot, and the way someone writes it up, where like, oh, I think they're going to beat earnings next quarter, and here's why, 3 bullet points.
Yeah.
That might be something that you like to do, but it also might not be. So it could be either stale information or information that you don't really care about.
Right. Yeah, exactly. The other thing I noticed about it too is I remember the information in there is automatically, the free version is automatically dated by 60 to 90 days. I don't remember specifically what it is.
Right.
So you are working with, it's a little bit like looking at the a form. Can't remember which one it is. The one, the blanket on the form.
13F.
Yeah, thank you. The 13F investing, or you're looking at what Warren Buffett is buying or selling, but it's also dated by at least, a quarter. So you have to take that into consideration for sure.
Exactly. Yeah. And on the Value Investors Club, I like to look sometimes at like an interesting stock pitch, and maybe it's been, I think it was 30 or 60 days from when it was actually posted if you're on the free version. That can be, well, it can be either helpful or dangerous if the stock's gone down a lot from then, because maybe it's even more cheap and they haven't had earnings or something like that. But it can also tell you, hey, look, this is what this person thought. Maybe there was an earnings update and things have been moving in a different direction. That can tell you something about the company. I mean, there's a lot of variables at play there. There's a lot of paths forward, but just an example, you can use that as context to what investors were thinking at the time and what has changed, what they got right, what they got wrong, and maybe the narrative about the company is more in line on what you think or not, or there's just, I don't know, it can help increase or decrease your conviction and your opinion on the stock.
Yeah, for sure. Yeah. So so far, these are all great ways to source ideas. I think probably one of the more popular ways to do it, and one that I've been using for many years, is using stock screeners. So we have a list here of stock screening with FinChat. So our friend Braden and Ryan and the gang have a great screener. So how do you use screeners to help you find ideas?
So one thing I do, and I would say if you don't have a brokerage that gives you access to international not brokerages, exchanges. So that just means, Japan, Mexico, European stuff. You should do that because it's widening the amount of stocks you can invest in. And you might not be an expert on every country. Well, no one's an expert on every country, but there may be some countries out there. I know, for example, Dave, you have family from Brazil. So like that, that market better than others. There might be people that know more about Europe, even India, Japan, wherever. If you're not able to invest in that, which a lot of your individual brokerages accounts don't allow you to in the United States, maybe think about changing. But that's one of the things I like to do, is look at different geographies, but then going through in that market and adding in some different growth, profitability, or valuation screeners. And I like to use gross profit. You can do 3, 5, 10-year average growth rates, but I like to do a multi-year growth rate to kick out any one-time bumps and stuff like that. And I think gross profit is better because that is a better top line figure because it just takes out your variable costs. And yeah, some companies might have a path forward to expanding their gross margins, but in general, I think it's going to be helpful more than hurtful. So I'll do something like, well, if you want to look for rapidly growing companies, you can add on, 50% or something like that and see what pops up. But you can also do 10% for durable growers. And it's more about combining everything together because when you add in, or when you have, a geography, it could just be the United States. And then you put in that gross profit growth or that top line growth figure. And then you add in some valuation ratios or earnings ratios, which could be enterprise value to EBIT, which is just operating income, or it could be enterprise value to free cash flow, it could be the typical PE ratio, or you could do all three. And I like to do like a range of 1 to just get rid of any sort of weird accounting stuff, as the low end, 1 to 15 or 13 or 14, whatever number you choose. And if you get too many results, just lower your or narrow your range and just go for cheaper stuff. And then how would I say it? You can also add in sectors or exclude or include different sectors. So there's a lot of companies out there that might be in financials that look cheap, but maybe don't grow much. It's not something you're interested in. Kick those out. But then just as it pops up, scroll through the list, see what looks interesting. It might just be, if you're looking for something consumer, it might just be within that category. You click on it, looks cheap. Okay, that's inspiration, not necessarily to buy, but it's inspiration to leave the platform, go to the SEC filings, and then read the annual report. Because if this is something new, it's almost always the idea of just turning over new rocks to see what's under there. And it might not be a promising idea. There could be something hairy on the balance sheet or a lawsuit or anything, but at least you turned it over, and hopefully, 1 out of 20, 1 out of 30, you'll find something promising that you might want to buy.
Yeah. What Peter Lynch, what did he say? He who turns over the most rocks wins.
Yeah, exactly. Well, that was Buffett. He turned over all of them.
All right. At least once.
Yeah.
So yeah, those are great. I like the geography one. I do that. I will search specific geographies as opposed to like just the US. I will also search for Europe, or I'll search in Brazil, or I'll search, other geographies, because that can help me find ideas I may not normally think of. And as far as like metrics or numbers, I like to look at revenue growth, and I like to look at it in rolling years. So 3, 5, and 10 years. And ideally 10% or more is greater. I also like to look at gross profit as well. I sometimes will throw operating profit in there as well, just for giggles, to see if a company is doing well with that. And then I like to look at the valuation ratio. And my favorite is price to free cash flow or free cash flow yield. Either one of those will work well for me and help me find companies. And to your point, if you are finding too many ideas, then you need to start playing with your ranges to try to see if you can find fewer ideas, because to your point, sometimes it can come up with 572 ideas to scroll through, and that's a bit too many.
Yep. And then one other tip I'll have on earnings multiples: if you're looking for growth stocks and you're not afraid to invest in kind of the Motley Fool style, David Gardner style, and other people have invested like this, but unprofitable companies that are growing quickly that could be, huge winners, the Amazon, NVIDIA types of the world. I like to look at either a price or enterprise value to gross profit multiple, which you could say, all right, under 5 or something like that. I think that can be interesting, where you have something where either the revenue or gross profit is growing at 15, 20% per year over a 3 to 5 year period, and it's trading at 3 times gross profit. That doesn't mean, maybe they have some really bad problems with the operating expense line, but I think it's an interesting, that's a compelling opportunity from a valuation standpoint, because if they can convert a lot of that gross profit to earnings and free cash flow, well, you might have a cheap stock.
I recommended a stock a couple of years ago that's up pretty big. I want to share that with you so you can see the type of analysis that I do for paid subscribers. Download it for free at stockwriteup.com.
Yeah, those are great additions. I guess the last thing that I will do is, you mentioned the whole sector idea, and that's something, especially if I feel like I'm concentrating too much in a particular sector, and maybe I want to look and see if there are ideas away from that, because it's no secret that I like, the whole fintech space. And so my natural inclination is, ooh, another fintech. Hey, let's add that to the list. To help me ward that off, sometimes I will pick different sectors that maybe I don't have much, if any, exposure to see what could be interesting. Energy, for example, or maybe commodities, or maybe something in manufacturing that I don't have a lot of presence in. I will do that just because if they don't fall into my, if I'm online on the Twitter sphere, for example, because I have an inclination towards fintechs, then Twitter knows that, and they're going to force feed me more of that information. What's going on with PayPal, what's going on with Adyen, what's going on with Visa, and
the online algorithms.
Yeah, it knows I like that because I click on all that. And so using a screener like this, intentionally looking for things away from those areas, can be, I find, very helpful. And sometimes I can find really good ideas from that. And so that is a little trick that I have kind of modified for myself.
Yeah, makes sense. I'll add in, you can put in dividend yield. You can put in buyback yield, which buyback yield is just what percentage of their market cap they had bought back, I think, in the previous 12 months. And for example, I'm someone that's interested in the Mexican economy, Mexican stocks, because I think there could be some promise there. I did once a simple just dividend yields above 6%, tossed up 12 companies or so in that market, and I took a look at them. And you can also combine that, where if you have a company paying a high dividend yield that has posted, top line growth of 10% per year, maybe even lower, maybe even 5% per year. So it's like a growing company, but it trades at a high dividend yield. That could also be something you would want to research.
Yeah, for sure. All right. So I guess if we look back on our current portfolio, maybe things we used to own but don't, like, how did you find your best investments? What were some of the places that you were able to fish that worked the best for you?
I think the best investment I ever had was from a simple stock screener. It was, I think, in 2019, and I can't remember what numbers I put in, but it just popped up, and I said, oh, okay, I should research this further. Seems interesting. No one's following it. And all right, wow, okay, this could be promising. And it ended up being promising. Now, it's not going to work every time, but that, I think, can work. You shouldn't just rely on a stock screener, but it can work. And I say the other ones are the network of newsletters or Twitter, where that's where I'm finding a lot of inspiration for just things to talk about. And on my own podcast, Chitchat Stocks, that's stuff we try to do constantly, where we bring people on, they talk about a company. Oh, okay, that might be interesting. They might be onto something here. All right, I'll research that myself. And I found from time to time those type of companies ending up in my portfolio.
Yeah, that's to me, I've done a lot of the same things. So probably one of my better investments, Adyen, I came across the company reading about some other fintechs. And then Leandro, one of my favorite follows on Twitter, had a thread about that. And this was years ago when, threads were still a thing. And he wrote about it, and it kind of intrigued me. So then I went and started reading the primary sources of the financial documents, and started to, air quote, fall in love, and then listen to one earnings call, which we talked about before. And I was hooked. And that has turned out really well for me. But that is kind of the same. I generally follow the same practice. I either find something online from other people that I think are interesting, or things that I come across in screeners. Like, those are my two, I guess, fishing holes that I go to the most, and they have worked well for me so far.
Yep, I agree. The thinking through my portfolio, a lot of it is from, and you can also follow a podcast where there's, breakdowns, other ones out there that will
Yours,
have people talking about stocks. Yeah, Chitchat Stocks. That's
yours. I mean,
literally in the title.
yeah, honestly, I mean, I'm not just saying this to blow smoke up your butt, but it it is one of the places that I go to find information and education about companies that I may not normally. You guys had, for example, you guys had a couple guys talking about Nvidia not too long ago, and it was a fantastic conversation, and I learned a lot about that company that I never would have, that I didn't pick up on reading the financial statements.
Yep. That's the point we do the show. And there are many others out there as well that I like to
Mhm.
listen to. Business breakdowns. I think people have heard
Oh
about
yeah,
that one. It's a very
oh yeah.
popular one. I know from time to time on this show you guys do stuff like that
Mhm.
as well. But yeah, I'd say in general, my recommendation to people is find and they're typically going to be online these days unless you're someone that works within the industry. That's the whole point of all this stuff is, well, most of your friends aren't as interested in investing in individual stocks as you are, or as we all are. It's going to be online, and whatever one floats your boat, whether it's Twitter or X, whether it's the copycats like Threads or Blue Sky, whether it's Substack, Value Investors Club, Stock
Mhm.
Screeners, or just listening to podcasts. Use those as research inspiration, but don't forget you got to research the stock yourself.
Right.
And if someone says buy this on a podcast, don't just do that because you're gonna
Mhm.
panic if the stock falls 30%.
Yeah, yeah, for sure. Yeah, I tend to avoid that stuff. How many? So here's an interesting idea. How many investment ideas have you ever gotten from CNBC, MSNBC, Wall Street Journal, any of those places?
Maybe Wall Street Journal because they do some in-depth stuff. CNBC, no, I don't ever watch it. I try to avoid it. The only time I see it on is at the gym, honestly.
Right.
And that it's not helpful. It is not because they're going to just be talking about it's news, so they're going to be talking about the most popular things, and it's not going to be helpful just when they talk about Nvidia, gold, Bitcoin, and Apple all day.
Mm-hmm.
There's not many in financial insights, and really the best thing you can do is long form. Like it has to be probably at least a 10-minute segment to get a full overview of the company's history, its business model, its balance sheet, its valuation, and its
Mm-hmm.
financial trajectory. You're not going to be able to do that on CNBC. Now, maybe the one thing that can be helpful is a CEO interview, because as someone, most of the listeners, we don't have access to talk to the management teams because we're not big enough investors. So we need to interpret them, I guess, in different sources.
Mm-hmm.
And any interviews they do could be on CNBC. I think those can be helpful because you have to really try to figure out whether you think, and I don't want to use the term liar, but if they
Yeah,
are someone that,
trustworthy or not.
if they're PT Barnum versus what's the other side of the scale?
Warren Buffett.
Warren Buffett. Yeah, exactly. You got to figure out what side of that spectrum they're on because unfortunately there are a lot of dishonest people
Yes.
running companies.
Yes, for sure. So you're saying that Tim Cook is not going to take my call?
Yeah, exactly. Now we get some microcap companies. You'd be surprised on
Right.
what the IR team will do.
Yeah.
But it can be helpful to listen to Tim Cook in a CNBC interview if they do one that's longer.
Mm-hmm.
And I found those helpful for evaluating a management team.
Yeah. Yeah. Good. That's a very good idea. So you kind of talked early in the show about not borrowing conviction. So what are your thoughts on borrowing ideas from other investors?
If it's someone I trust, if it's someone I knew has done good work in the past, someone that I've known for a while, I'm not afraid to, let's say, do a little bit of an invest and then investigate, where I'll buy a little bit, research for myself, and then if I find something I like or don't like, I'll increase the position or sell it all, because sometimes there can be, I don't know, some timing around that, and we are long-term investors, but if an idea sounds promising, you're not going to really get beat up if you sell it within a week. And if someone makes the pitch and then a bigger fund finds that pitch and decides to buy it up, the stock can move 20, 30%. So I'd rather, and that's a good thing if you bought it, right? So
Right.
I'm not afraid to do that. But generally, I'd say in most circumstances, I'd read someone's report that I trust, say, okay, they're smart, they're making some good points here, but then I'm going to always, whether I buy before or after or add to the position after, I'm going to research the annual report, proxy statement, some of the basic stuff myself.
Yeah. I guess, what are your thoughts on the whole following super investors into investments?
Dangerous. I think it's dangerous. For example, Alibaba. There was some famous people investing in Alibaba, and honestly, some super investors copied other super investors and bought Alibaba, and the stock has been, well, maybe it's done well recently, but I believe it is flat since 2015. Let me just confirm that. Up 20% since 2014, excluding dividends, but
Okay.
that's not very good.
No, that's not very good. Not at all.
And I think some 13Fs can be helpful if it's someone that doesn't trade much, but I'm not a big 13F guy. I think it can be stale. They may have already sold it. You only know American companies that they hold. You don't know whether they're shorting something. You don't know whether it's a hedge. You don't know whether they have a bunch of international exposure. There's just things that can be misleading with those. And sure, people like looking at what Buffett has bought and sold, but I don't care that he bought Domino's. Does that mean I should buy Domino's pizza? I should think about that myself.
Yeah, I know, Bill Ackman gets a lot of, he's noisy on social
media. A lot of flack.
Yeah, he gets a lot of flack. And I like to, it's interesting to look at the 13F's potential investment ideas, but to this point, I have never followed an investor into an investment that has, done something. It's more about, like, I guess, confirmation bias. Like, if you buy something, you do the work, you buy something, and then you hear that, Stanley Druckenmiller, also bought the same thing. It's like, oh, all right, that's kind of nice. All right, maybe I wasn't wrong.
One of my favorite things was seeing that I bought before Druckenmiller. That made me feel pretty good last year.
Yeah, when you see stuff like that, I think it's natural to feel like, oh, all right, that's kind of cool. Maybe I was right about this. But as far as, like, the other way around, like getting the idea from, Druckenmiller and then making the investment, I haven't done that. As much as I love Buffett, I'm not following the things he's invested. Like, to your point, I'm not buying Domino's. I didn't buy Nubank because he invested in it, or Ted and Todd did, but it was helpful. Okay, it's good to know that these guys think it's a good company, but doesn't impact my decision on whether to buy or sell something.
Exactly. Yep. Couldn't have said it better myself.
All right. So I guess the last question is, when you're, like, how much time do you spend trying to source ideas versus maybe working on your watch list or your work list, research list behind you? Like, is this something you do regularly, or is this like every once in a while where you feel like you need something fresh to go on your research because you're, like, looking at all the names that are on there and you go, none of these are moving me. I need something else.
So every day I'll read at least some of the Wall Street Journal. Kind of, maybe if I don't have too much time, I will, scroll through and find anything that's interesting. And sometimes that can help with sourcing ideas. You can also do that with Bloomberg, Financial Times, other stuff. So then I also have the newsletters that I follow, and they don't post every day, but I will look at that every morning or maybe in the evening. And if there's anything that piques my interest, I'll read that. And then I try to be a bit serendipitous on Twitter and spend maybe a half hour a day. Now, sometimes you end up spending more time on there, especially if there's a lot of news items out there. But for, like, weekdays, or for if my existing research list is small, I'll try to explore on there, or Value Investors Club, maybe 15, 30 minutes per day, build up that watch list. But sometimes you got to try to force yourself. Oh, hey, don't just spend an hour on Twitter arguing about blah, blah, blah stock with people. You can go through your existing research list. There's always something to do out there. Usually it's not too hard to keep stuff coming into the existing research list. Now, a lot of those might be duds, and you might 5 minutes into the research go, this doesn't make sense for me. I try not to spend too much time, but allocate at least a decent amount each week to, hey, it's not formulaic, but when you're on Twitter, sometimes, like for example, this morning, someone posted, I loaded up right now, I saved it. It's a company called Phonar Corporation. It is the maker of MRI machines, or maybe one of the makers. And some guy I followed just tweeted, hey, it's trading at half book value. Seems interesting. Market cap $76 million. Enterprise value is $50 million. PE is 10. The true earnings from the basic stuff I looked at on FinChat might be even cheaper than that. Now, I don't know if that's a good investment, but I put it on the list and said, hey, I should look at this later. Could be interesting.
That's cool. That's a really good example of how applying what we talked about today can potentially lead to a good investment.
Yeah, but some days you don't find anything. So it's almost, I like to think of it as serendipitous. You just got to put, it's almost like dating. You got to put yourself out there and then talk with the other investors, and they'll help you find some stuff.
Yeah, the perfect stock will come to you when it's ready to come to you.
Yeah, exactly.
All right. So you dropped a ton of knowledge and a lot of great ideas and stuff. If people want to hear more of what Brett's doing, where can they go?
Yeah, you can do that by searching the Chitchat Stocks podcast on Spotify, Apple Podcasts, YouTube, or whatever podcast platform you listen to shows. And we do interviews with people talking stocks. For example, Dave or Andrew have come on from time to time. We do research episodes ourselves, and we study super investors and kind of how they became successful and what we can learn from them. So trying to help people source ideas and become better investors.
Yeah, it's a great show. It's a lot of fun, and you guys always, both you and Ryan, drop a lot of knowledge, and it's always been very, very helpful to me. And I've enjoyed listening to this show even before I knew you guys. So keep up the great work.
Appreciate it. And thank you for having me on this show once again, and looking forward to doing them on a regular basis.
Yeah, me too. All right. Well, with that, everyone, we will go ahead and wrap up our conversation for today. Go out there and invest with a margin of safety, emphasis on the safety. Have a great week, and we'll talk to you next week.